Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today, on October 24th, 2025, we are diving deep into one of the market's most watched stocks, Tesla, ticker symbol Tesla. It has been an incredibly volatile week following the company's Q3 earnings report, which triggered a sharp sell-off followed by a stunning reversal. In this video, we will dissect the latest news and earnings data, then correlate that with what we're seeing on the charts to build a comprehensive trading plan. We'll cover key levels, trends, and what to watch for next, so let's get started. First, let's talk about the fundamental catalyst, which was the Q3 earnings report released 2 days ago. Headlines were dominated by a miss on profit, with adjusted earnings per share coming in below Wall Street's expectations. This miss was attributed to several factors creating headwinds for the company. Automotive gross margins continued to compress, falling to 15.4%, a result of the aggressive price cuts Tesla has been implementing to drive volume. Furthermore, revenue from regulatory credits saw a steep 43% decline year-over-year, removing a significant source of high-margin income. The company also cited over $400 million in negative tariff impacts, adding further pressure to the bottom line. This combination of factors represents the core bearish argument right now. The profitability of the core auto business is under significant pressure. However, during the earnings call, Elon Musk shifted the focus almost entirely to the future. He spoke at length about Tesla's ambitions in AI, robotics with the Optimus project, and achieving full self-driving for its Robotaxi network. Musk projected Robotaxi operations in up to 10 cities by the end of this year and teased major advancements for the humanoid robot in 2026. This created a powerful counter-narrative, framing Tesla not as a car company with shrinking margins, but as an AI and robotics powerhouse with unimaginable long-term potential. This stark contrast in narratives is reflected in analyst ratings, which are all over the place. Some firms like Wedbush see the stock going to $600 based on the AI thesis, while others like Cantor Fitzgerald have a target of $355, citing near-term operational challenges. Investors are also keeping an eye on a crucial shareholder vote scheduled for November 6th regarding Musk's controversial pay package, which could be another source of volatility. So you have a clear battle: weakening current financials versus a grand, futuristic vision. Now, let's see how this battle played out on the daily chart. Looking at the bigger picture, Tesla has been in a strong uptrend since the summer, rallying from below $200 to a recent peak around $470 in early October. Leading into earnings, the stock had pulled back and was showing some weakness. Then, we get to yesterday's candle for October 23rd, which is the most important candle on this chart right now. The stock gapped down on the open, sold off hard, and then completely reversed to close positive on the day, forming a massive bullish hammer or engulfing candle. What's incredibly significant is that this reversal happened on enormous volume, suggesting that large institutions stepped in to buy the dip, absorbing all the panic selling. This action establishes a critical new support level at yesterday's low of $413.90. As long as the price stays above this level, the bulls are in control in the short term. Key resistance levels to watch are the psychological $450 mark, which was tested yesterday, the early October high around $470, and the 52-week high just above at $488. To get a better look at this dramatic reversal, let's switch to the 1-hour chart and zoom in on the last few days. Here you can see the price action on October 22nd was relatively calm leading up to the report. Then, on the morning of October 23rd, you see the massive gap down as the market reacted negatively to the earnings miss. The selling pressure continued in the first hour of trading, establishing that crucial low. But from that point on, it was a steady, relentless climb for the rest of the session. Each hourly candle made a higher low, showing that buyers were in complete control after the initial panic subsided. This illustrates the shift in market sentiment in real time, as the focus moved from the profit miss to Musk's long-term vision. Now let's drill down even further to the 15-minute chart to pinpoint the exact moment of the reversal. In the first 15-minute candle of the main session yesterday, we saw a sharp drop, and the low of the day at $413.90 was hit in the second 15-minute candle. Look at the immediate and aggressive buying response right at that level. That strong rejection of lower prices indicates a major area of demand where buyers were willing to step in with force. The rest of the day was a methodical climb back, confirming that the bottom was in for the session. So, putting it all together, what are the scenarios from here? Let's go back to the daily chart. The short-term bullish case is strong due to yesterday's price action. The market has spoken, and for now, it's choosing to believe in the long-term story over the short-term margin concerns. A break and hold above the $450 resistance level would be very bullish, signaling a continuation of the uptrend. This would open the door for a retest of the $470 resistance area and potentially the 52-week highs. Traders taking a bullish stance would use yesterday's low of $413.90 as their stop-loss level, as a break below would invalidate the immediate bullish thesis. On the other hand, the short-term bearish case hinges on the failure of this reversal. The stock is trading slightly lower today, which could be simple consolidation, or it could be the start of a rejection. If sellers regain control and push the price back down below $413.90, especially on high volume, it would be a major sign of weakness. This would indicate that the fundamental concerns about profitability are reasserting themselves. A break of that support could lead to a swift move down to test the psychological support at $400. Long-term, your view on Tesla depends entirely on which narrative you subscribe to. If you believe in the AI, robotics, and autonomy future, then any dip is a buying opportunity. If you believe it's an overvalued car manufacturer facing immense competition and declining profitability, then this is a rally to sell into. To recap, let's lay out the most critical information. The key support level to watch is the line in the sand at $413.90. Below that, the next major support is around the $400 psychological level. Key resistance levels are at $450, the recent high of $470, and the 52-week high of $488.54. Given the powerful, high-volume reversal yesterday, I believe a bullish continuation is the more probable scenario, with about a 65% likelihood. This would be confirmed if the price can decisively break and hold above $450 in the coming sessions. The bearish failure scenario, where we break below $413.90, has about a 35% chance, but a move like that would be a significant red flag for the bulls. Moving forward, keep a close eye on these price levels. Also, be aware of the upcoming shareholder vote on November 6th, as it could introduce significant volatility. Finally, please remember that this is not financial advice. This analysis is for educational and informational purposes only, and you should always do your own research and make your own investment decisions.